Hello, everyone. Welcome to a market update with Buying South Florida. Today, I have Dominic on here. We want to talk about some of the things that are changing in 2023 that we want you to keep in mind heading into the new year. First and foremost, we will be talking about the Hometown Heroes program we recently got approved for. We'll be talking about the changes to the loan limits and also just a little bit of forecast or market forecast for interest rates and market value heading into the new year. So, to kick us off, Dominic, tell us a little bit about Hometown Heroes program that we just got approved for.
Yeah, man. So we got approved for it not too long ago. I know you and I did a stream on it probably a couple of months ago. Turned into a flop. Ron DeSantis did not allow mortgage brokers to write those specific loans. So we were kind of fighting back and forth. I know a lot of us independent mortgage brokers were signing petitions, trying to get that approved. So we finally got it. We just got approved, paperwork filed. So our brokerage did all of that, hefty paperwork for us. So now we're able to do them. So the good thing about it is anybody in the front line that's a frontline worker, anyone that's a teacher, anyone working in the hospitals, even volunteers can be approved for this program. I know our last stream, we kind of went through a detailed list. So if anyone on here who's listening needs to know if they're approved, all you have to do is contact us. We can let you know if your occupation is approved. I actually have an occupation list here. I would read it off, but there's probably about 150 different occupations that are approved for it. So yeah, it's very expansive. They're looking to help out, our frontline workers. They want to take care, the Florida, especially Governor Ron DeSantis wants to take care of them. So essentially, it's just going to be a down payment assistance program. It's going to follow a strict amount of guidelines that we have to follow, such as loan limits, income limits. But those are all a bit, more technical, and we can assess the situation if anyone on here is wondering or inquiring on it. The good thing that this can do too, especially for our realtors out there, it's great to market. I know that there are a ton of potential buyers out there, first-time home buyers, especially ones that work in the hospitals, nurses, surgical techs, etc. They're all stuck renting. Maybe they don't have the specific amount of funds to be able to put down for a down payment. So this program is huge and a great opportunity for them.
Yeah, it definitely creates more opportunities for the clients that are out there that qualify with good credit, good income, and don't have the down payment available to purchase a property. This is your down payment assistance program. We did have other down payment assistance programs, so this is just another one that we're able to add to our repertoire of programs that we're able to offer first-time home buyers. So when this program first got signed into law by Governor DeSantis, it was only or mainstream banks were the only ones allowed to write this loan program, to the detriment of us brokers and to the detriment of our clients. We weren't able to have this down payment assistance program. Now, luckily for us, we do work with lenders and banks that did have their own down payment assistance program. But overall, it's good that we're able to bring on another option for the clients to be able to qualify for and consider, in their home purchase journey, right? So this is definitely good news going into the new year. We have the Hometown Heroes down payment assistance program in addition to other down payment assistance programs that we originally had. With that being said, we also have, if a client doesn't qualify for a down payment assistance program, we do have other strategies that we can use to offset some of the closing costs, some down payments, etc., from the seller side, from the listing agent side, and so forth. So if someone doesn't qualify for a down payment assistance program, we can still take advantage of some of the other strategies that we put into place to get the most out of every offer that we make and make sure that clients get the best possible deal they possibly can. Another change that's coming as of January 1st, 2023 is the increase of loan limits. So Freddie Mac and Fannie Mae have both increased the conventional loan limits, and also the FHA has increased their loan limits. What that means is first-time home buyers or buyers that are within the loan limits price range can now go a little bit higher without the need to go into what we call a jumbo loan or high balance loan, right? So we can still stay within the conventional loan limits now that the loan limits have been increased. Better underwriting process for our clients, better interest rates, better cost. So this is definitely a move that was long time coming. This is the second time that the loan limits have been increased in recent years. which I think it's a great move, or the third time, I believe. It's a great move. You have to adjust these loan limits to adjust to the change in market, the increase in market values, the increase in inflation, and so forth. This is needed. So this is really good news for first-time homebuyers. FHA loan limits have been increased. Conventional loan limits have also been increased, so you don't need to go into the jumbo loan underwriting scenario, right? In addition to that, just kind of like our thoughts going into 2023. At the beginning of this year, we had a multiple streams where we talked about the outlook for market values in 2022. And we said towards the end of this year, we thought market values were going to drop about 5 to 10% at the end of the year. And here we are, that remained true, right? Just the increase in interest rates would have caused or causes affordability to drop, which means market values have to decrease to adjust to the change in interest rates, just because of the affordability metrics. Now, if you listen to the mainstream news out there and so forth, market values are dropping nationwide, etc. You have to be very careful listening to that, because real estate is very local, right? The market up in North Florida is very different than the market in South Florida, the market in Baltimore, the market in other cities, Ohio, Cleveland, etc. Those markets are completely different than the markets down here. I can say that being an investor and homeowner, etc., in the market in South Florida, and obviously helping our clients here, the supply and demand is something that's really keeping our market values up, or at least preventing them from continuing to increase at a rate that they were increasing before. So even though the interest rates have doubled and more, right, it stands to reason that market values have to decrease, which is what we said at the beginning of this year. But I also said that demand will continue to hold our market values up, just because of the demand from Central and South America, Europe, etc. This South Florida market really has a lot of demand from the international market. Then also from other states, there's a lot of people moving into the South Florida market due to politics, due to weather, etc. So a demand down here has remained high, which is why we haven't seen a decrease in property values as high as other markets have experienced.
So to your point there too, like with what you just said about the real estate market being very local, obviously everybody's on social media nowadays. We all see the news posts about everybody fingers crossed, millennials fingers crossed for a market crash. Everybody wants to see housing prices plummet. Most people read these articles, and so for the first time home buyers, they tend to get nervous, right? They tend to see these articles stating housing market prices are going to decrease, etc. What should we do? Should we get in now? Should we wait? I was just talking to a realtor the other day, and she was asking me about how business was going. We were going back and forth, talking about how everything has been just with the market, talking industry news. And she said something that, that stayed with me is most people tend to follow the news and they fear getting into the market, right? When she said, if everybody just takes a step back and looks at just our market, our real estate market, if the first time home buyers did some due diligence, got with a mortgage broker, got with a real estate agent, sat down and said, hey, what can we afford and what can we get into right now? They would see that it's very affordable, not only with interest rates raising up, but prices are coming down as to what we stated at the beginning of the year. Mario, I think you said it was going to be about a 5 to 10% decrease end of year, correct?
Yep.
And I mean, we can see just that. So I think, when based off of the real estate market, a lot of first-time home buyers, especially if you're out there listening now, kind of stray away from social media and the news reporting about how housing market crashes, Airbnb market crashes. Those are very, very reported on area-specific news. So let's say the Airbnb market in Seattle might be taking a crash, right? Might be experiencing some difficulties. That's in Seattle. That's not in South Florida. So anybody here in South Florida, Northern Florida, has to assess the market based off their location. Mario, I'm sure you would agree, but it's truly the news. The news will say one thing, but you really just have to look at the facts and get with a mortgage broker, get with a real estate agent, anyone who's in the industry, and ask them. Maybe sit down, have a 5-minute phone call, and I think that would really help first-time home buyers with their worries and just really prove to them that the market isn't as bad as everybody is reporting it to be.
Yeah, and I think it's important that when we look at the market now, if you think that the market's going to crash, you're going to wait for that crash to buy a property. You have to take into account the expense that you're paying until that crash gets here, right? And when the real estate market, quote unquote, crashes, it doesn't crash overnight. It's not the stock market or crypto. It takes time for property values to come down, to quote unquote crash, right? So um, I think it's really important that when first time home buyers, second time home buyers, even investors, they're looking at properties to buy and determining whether they're going to buy or not. It's important to determine the time frame. If you're looking to buy this property and live in it for the foreseeable future, 5+ years, etc., it doesn't matter if the market crashes next year or the next, because you're not in the market to sell. So if you buy a property, let's say single family residence, Miramar, you buy it at 500,000, and by the end of next year, the property values have come down, 20-25%. Your property is now valued at 400,000. It doesn't matter, right? Your mortgage payment is fixed for 30 years. Continue to make your payments. Nothing really changes for you because you're not in the market to sell the property. So if the concern is that the market value is going to decrease, shouldn't be a concern at all if you're looking to live in the property medium to long term. If you're looking to buy a property to flip within 2 or 3 months, maybe a year or so, now it's a little bit different. The market outlook going forward is that we've hit a peak, we're going in a downward trend. How much lower? No one really knows, but it is going to be a downward trend in the short term, right? But if that only concerns you if you're looking to sell a property in the short term. If you're looking to hold it and live in it, etc. Same thing for investors. If you're an investor, there's two really main strategies that you have to approach. One is a equity growth, right? The second is cash flow. You can't try to do both. It's very difficult to find a property that's really good with equity growth and cash flows great, right? So in a market that we're seeing the trends going downward, it's important for investors to focus on cash flow. Why? Because if you buy a property, income producing property, and you're not looking to sell in a year or two, or 3 or 4 or 5, but the property produces a lot of rental income, great return on investment, then that's all you're worried about. It doesn't matter if the property value drops. You're not selling the property, you're renting the property. It's two different things, right? So for those that are concerned about a market crash or waiting for a market crash to come, I would say it's important to understand time frame, and it really doesn't matter in the short run if you're just not looking to sell the property. And then in addition to that is interest rates are right now the highest we've seen them in a really long time. If your concern is you're going to wait for low interest rates, we just will not see low interest rates until inflation comes back down. So how long is that going to take? We don't know. It could be 3-4 months, it could be a year or two. Are you willing to wait for a year or two, continue to pay rent, waiting for what, a 1 or 2% drop in interest rates? Because they're not going to go back down to 2 or 3% like they were during the pandemic. Before the pandemic, they were at 4 or 5%, right? They're at 6% now. So if you drop from 6% down to 5%, how much are you really saving if you just spent a year paying so much in rent, right? So something to keep in mind too. And just to kind of wrap up there, I know we've talked about a lot uh, about whether or not someone should invest or in a downtrending market and so forth. Again, guys, just keep in mind there's two different approaches for investing, real estate investing. You have equity growth and you have cash flow, one or the other. In this market now, my opinion is we focus on cash flow. A lot of short-term rentals, medium-term, seasonal rentals, maybe long-term, but I like the seasonal and mid-term rentals better now for cash flowing. And it's a really good strategy to have. It doesn't matter what my equity does in the short run because I'm not selling, right? So that's my thoughts there. Going into next year, I think we're going to continue to see the interest rates about where they are now. I don't think we're going to see interest rates drop back to pre-pandemic levels in the 4 or 5% next year. We'll definitely see them fluctuate a little bit up and down depending on how monetary policy performs and inflation and CPI reports, all of that stuff. But I just don't see the interest rates coming down to 4 or 5% again. So we'll probably they'll continue to be in the 6%, maybe in the 5%, and property values would, they will not increase, or at least stop from increase at the rate that they were before. I will see. I'm expecting to see a little bit of a return to a normal real estate market, right, where you can actually go see properties, you can actually pick out the properties you like without having to go into a multiple offers situation where there's like 20, 30 offers over the weekend for a property, So if you have, back to one of your points, if you're a buyer and you're waiting for a market crash and the interest rates to drop to buy something, that's the time that everyone is going to be buying something. So now is the time to really take your time shopping, pick out a really good property. You don't have to enter into a multiple offers situation. It's actually a good experience for buyers. Now, if you wait, careful what you wish for. If you wait for market crash and interest rates to be back down to 4 or 5%, imagine the multiple offer situations that you're going to be going up against. Not only are you, because of the market crash, brings in new buyers, but you also have new investors that are coming in with cash. So now you have to compete against those people. So now you'll
Absolutely.
find yourself in the same situation that we were during COVID, where you go to a house and an open house and there's 40 people waiting outside. You get 30 offers over the weekend. And what did you really wait for? Now you have to settle for a property that you really didn't, want to settle for. If you would have bought a year before, right, where nobody was buying, you can actually go buy a property that you like. You can take your time seeing multiple properties. There's no rush. There's not, that fire under everyone's butt where we have to put in enough for now, or we're going to lose it. So the experience now for the buyers is much better than it was during the COVID times. And, just going forward, it all depends on someone's, personal
Yeah.
finances and so forth. But now it's a good time to buy, in the sense that you can take your time finding the right property, adding good property as an investor to your portfolio. You don't have to be out there negotiating and putting up with multiple offers and so forth. So that's kind of my take of where we are now, where we're headed into 2023. Good changes happening in the loan limits and the down payment assistance program. So more options for buyers. And I think interest rates will remain about the same. Market values will come down to a normal real estate level. And that's it. We'll keep an eye on the market, and we'll keep bringing the news to you guys.
Absolutely. I agree. I mean, that's all you got, Mario, man. It was a pleasure. 2022 was a good run, and looking forward to 2023.
Yes, sir. Happy New Year's to everyone. Stay safe, guys. Till next time.